So, any point if you've got any questions on anything. Otherwise, we shall run through. So, thinking about what we're going to do today, what is our aim for tonight in terms of what we're going to cover? So we're going to have a little think about tonight. Recap the knowledge with regards to audit reports, reports to management. So to recap that knowledge, we're going to have a little think about what we're going to do audit reporting questions, and I'm going to share with you a diagram that I've got, which is something that includes all of the additional little bits and pieces you could put in an audit report. So it's going to answer any of the questions that you need. That'll be quite useful. We'll have a little recap of a run through that. How reporting works, concluding and reporting make up 5% assurance syllabus. It's absolutely going to come up in the exam in some context. So the portion of the syllabus, absolutely definitely going to come up in some context. Think about how it usually comes up. It's quite commonly a 20-mark question. To either describe modifications you might make to an audit report, for discussing modified reports with modified or unmodified opinions. Or it's a slightly shorter question which includes parts of reporting as well as parts on reports and management. Most questions will focus on audit reporting rather than reports and management, but it's important to consider both. Exactly how they're going to come up is variable. I said 20-mark question is usual if it comes up in test questions. Very, very occasionally, so I'll write this in red, occasionally no reporting written test question. And then the USFQs on it. A bit more unusual because it is a large area of the syllabus. We would generally expect it to be a written style question, but there is the odd exam in the past where they've thrown a little bit of a curveball. It's not that's any different, it's just the application of it. We'll have a little think about that later. Some exams fit the reporting aspects into the questions that are primarily about something else. So sometimes which primarily about something else. You have some focus on the audit assurance report of us. It's a 30-mark question. If they're throwing something a little bit more unusual in the bag, where they're asking you to do some planning bits, but also to do some reporting afterwards. So this will come up. Sorry, James is one of the other PLAs who's just doing the meeting at the minute. I'm just going to check that he's okay. Cool. He's just sent me some little bits and pieces because he's having a bit of a night on his end. So we'll download those forward. We need them in a minute. We'll come back into that and think what we're doing today. So, sorry about that little distraction. I just had to help James with some questions which are primarily about something else with reporting as a sort of little side bit. We're going to think about reporting in general. Questions about how we're going to do things, or what we want to do, or wants to ask me anything about how we're going to go through things this evening, or are you all happy to plow through? When you do ask me questions, can you edit to all participants? Everybody can see your question. So you'll select all participants. That way, ask me a question, I'll be able to answer it to everybody, and I won't just be speaking to one person. Okay, great. So what we're going to think about now then is reporting in general. So as I said, in areas that we need to think about. areas are reporting to those charged with governance, that's what we'll look at first tonight. So look at tonight. We'll then look at audit reports. That is complete statutory audit under the Companies Act 2006, and my audit testing, on to my conclusions, and then I finish this audit report. We're going to talk about that tonight with specific scenarios. Definitely can ask it in the exam, but fundamentally they are very similar questions each time. It's always thinking about how you're going to lay it out and how you're going to structure it, but quite often the questions are very similar. So if you do a lot of question practice for audit assurance, and that really is the key for audit and assurance, is question practice. Think about how you're going to answer them in the exam. You can really do yourself a lot of favors by getting that question practice in, because once you've done it a few times, any questions that you come across are going to be similar to the ones in the question bank. You may even have the same points in, or points are very, very similar. So that practice is going to come in really helpful. Third possible area are issues reports, which we're going to think about tonight. Assurance reports, that is your study manual. And there was some SML reports. So we're going to look at that tonight. Obviously, if you've got any questions about assurance reports, you can always stick those up on the community, and someone can get back to you on them. But as these two are the much more frequently examined, that's what we're going to focus on tonight. So we're a nice exam focus. For our tutorials. The most frequently examined portion of it. Well, now it's coming to the slides that we've got ready for tonight. That's a little bit of a brief intro before we go through into the slides. So, I can see all of your questions, by the way, so still give me a shout if you've got any stuff on that. So through the slides, we're going to talk about reporting to those charged with governance. Move that down. Just put it so that everyone can see. So report to those charged with governance. And by ISA 260 and ISA 265. And it is definitely worth highlighting those within your open books. Some really good points in there as well, particularly with regards to covering letter. We're going to have a look at how they come up, and we're actually going to do a bit of a question tonight that we've got ready for you. And once we have a run through that, you'll see how obvious kind of the question is when it comes up, because it's the same basically every single time. Part of what they sometimes ask for is a covering letter. Now the question due tonight, they don't ask for the covering letter, just ask for the appendix bit. But if they ask for the covering letter, these two standards are fantastic. They've got all of the contents for each one of the types of covering letter. So that'd be really helpful if you ever come across that and you actually need it as part of your exam. Not frequently, most of the time they just want you to do the appendix bit, but then they do specifically say whether or not they want you to do that covering letter. The most frequently examined topic within reports to those charged with governance is reports to management. Now, reports to management, all about internal control deficiencies that we found during the audit. So at the end of the audit, we do our audit report, we do our normal bits and pieces. Also include is a report to those charged with governance, specific management, to them any internal control deficiencies we encountered during the audit. We make a few points. Is number one, we stress that it is not all internal control deficiencies. So all important to them is things that we came across as part of our testing. So let's get expenses testing. I discovered a load of journals for some expenses that someone had put through that had been authorised. The load of journals going through haven't been authorised. So I want to highlight that to management because it's potentially a problem for their business. I'm not saying that that's all of the problems in their control system, or indeed that's even all of the problems with identifying them. it is to communicate those to management. So we explain the internal control deficiencies during the audit, and we explain the control deficiencies in the context of either a business cost or a misstatement. Say to them, either this could actually lead to it costing you lots and lots of money, or it could lead to large misstatements in the actual numbers themselves. Or for some situations, it will be, but indeed, some of the things that we look at tonight, there's both potential misstatement problem. There is also an issue with whether or not it's going to cost the business money. So we identify those internal control deficiencies, explain them to management. What we do is make recommendations for improvements. We explain to them, look, this is the problem, this is going to cost your business, this is the solution that we think might help you. This is included within the management letter. With that, do just give me a chat box if there's anything you need to ask me about it. But it's management problems with their control deficiencies, their controls that we found throughout the course of the audit, and potential recommendations in order to solve that. And so there's a lot about adding value as auditors. Because, yes, we do our audit. Our statutory audit is what we are there to do, but it is trying to add value to businesses as we can within the remits of standards. Obviously, we can't be making management decisions and we can't be actually running the business for them, but we have some value. Our experience allows us to be pretty expert when it comes to identifying problems and potentially looking at solutions for said issues. So it's a kind of excellent way of adding value into the entity. What does it look like then? So we'll actually be including typical requirement asks for extracts suitable for inclusion in the appendix to a report to management. So that's saying earlier when they ask for the appendix, what they want is a table dealing the deficiency, the potential implications, and the recommendations. Whilst it is a table, it is a table that you can include in the actual appendix. So it's a really strong table to include, and it's a good way of laying it out. You don't really want to be doing this in kind of big blocks of text. Much more logical to have the deficiency, the related implications, and the related recommendations. Line, deficiency, related implications, recommendations. So it's very good. So even though they say in a form suitable for publication, what is you can use this table because this is what you would do if you're actually going to do this report to management. The exam give you the deficiency. So, given, which they usually are these days, they generally give you the deficiency and ask you to explain the implications. Then you don't actually need necessarily the deficiencies column. You can instead use subheadings within the implications column. So the question we're going to look at, which is Dulux hotels, is one where they do give you the deficiency. You're not getting any extra marks for re-explaining the deficiency, so there's no point in doing it. Justifications and the recommendations. Actually, in the exam, I'm probably going to do it a bit more like this. I'm going to probably use two columns. They're brief subheading to show which deficiency you're dealing with, and the implications and the relevant recommendations. So let's see that example I discussed a little bit earlier when I was talking about the lack of authorization of journals. Your subheading could be no authorization with regards to purchase journals. Explain the implication, which could potentially be that we are paying too much for supplies, or it could be people who steal supplies if they're not authorized, or people are fake suppliers, whatever issue it is that you think might be a problem. Explain the related recommendations. So this subheading with two columns, much more sensible than including a separate third deficiency column that you're explaining. Think about how I should phrase these implications. Emphasize the cost to the business. Emphasize whether it's going to have an adverse effect on profit. If too much, for example, for my suppliers, for example, as I mentioned, that have an adverse effect on profit, expenses are going to be much larger. What if there's impact on cash flows? Well, if I'm paying far too much, I'm putting more cash out than I need to, so that might potentially damage my cash flow problems. Also think about loss of customer or loss of staff goodwill. This is effectively your chance to sell the importance of the deficiency. To really stress why it's important management should care about this deficiency. Should they be worried because it's going to impact profit? Should they be worried because it's going to impact cash flows, goodwill, etc., etc.? Financial statement are also a problem for management because ultimately, we're going to do the audit. If there are errors in their financial statements, which are there as a result of some problem, then that is going to be an issue. We're going to ask for adjustments, all sorts of things like that. So implications emphasize the problem to the business and to sell it as a problem to them effectively. Recommendations then, you need about your recommendations, and they need to be nice and specific. So effectively what you're trying to do is decide who should be doing what, and should be doing it, and in fact how they should. And be specific enough so that the client knows exactly what they need to do next. It could be, in the case of the discussion that I just had about the authorizing expenses, the recommendation could be something like, ensure the finance director approves all expenditures over a certain amount, or ensure that there is a regular review of expenditure and any adverse expenditure or strange deviation are investigated and dealt with. So the two recommendations need to be, firstly, they need to be specific, and they also need to be commercially feasible. When I described that last recommendation, that I said the FD should approve all expenses over a certain level, not all expenses full stop, because it's not going to be commercially viable for a director to approve every piece of expenditure for everything that's happening in the business. They're just not going to be able to do it. It's not going to. You don't need the finance director to do it as well. You don't need him to be approving purchase of Tipp-Ex or bags or toilet roll. It needs to happen. If it's purchase of big items, it needs to be happening with regard to proven authorization. So just think a little bit commercially as well. Is everyone okay now? Are you ready? Because we're a question now. Good. Okay. So what we're going to look at ICAEW question bank 57. So if you've got your student workbooks, you have that there. Has everyone got that question? Is there anybody who doesn't have it? No. So I'm going to on screen a little bit while we talk about it, so we can flow a little bit between the two. How I would go about answering this in the exam, as well as thinking about how I would go about structuring it, for example. So I don't just want to dive straight into doing it. We can also have a little think about how you're going to structure it. So I will bring up question bank. Get it now, Elizabeth, and then tell you which page it's on. So Ducks Hotel is on page. Oh dear, that is. I'll use page down instead. So we're doing Ducks Hotel, which is, I believe, question 57. Yes, there it is. So question 7 on page 88. Let's go down to page 88. This is what we're going to look at question-wise. So, Hotel Limited, your firm is the auditor of Dulux Hotel Limited, which owns and manages a chain of hotels. Hotel systems are run on network computers, and the accounting function is centralized at head office, which is responsible, amongst other matters, for capital expenditure. The following key points have been identified during the audit. 3 deficiencies that have been identified and explained. So we're thinking about structuring mine first. I'm going to think about structuring them with these 3 subheadings. Room lettings for corporate customers. Staff of DAS granted discounts in excess of authorized levels in % of transactions examined. What's that saying is, as auditors, we chose our sample. 40% of the time, we're doing discounting excess of with the authorized company policy. Think about why that's a problem in a minute. Credit limits are set for about 50% of corporate customers with credit accounts. All tests indicated that about 20% of customers with formal credit limits have exceeded those limits for more than 6 months. So that's essentially a big problem as a business with credit limits, but we're not backing them up. People are actually just exceeding them. 6 months is a very long time. Property, plant and equipment. Company policy, which used to obtain fee quotes for capital expenditure in excess of £5,000, was not adhered to on 2 separate occasions. That could potentially be a huge problem. Capital expenditure that's well in excess of £5,000, so maybe that was wouldn't consult on a new room for 30 or 40 or £50,000, so we could potentially have some problems. Then computer system, files holding business critical data and systems are not cited in secure locations. So this one's access to information. As it's not a very secure location, anyone can get in there, access the information. Essentially, that increases our risk of data loss. Changing passwords is at the discretion of staff members. With changing passwords is not that staff themselves are allowed to change their own passwords, because everyone lets places choose their own password. The issue here is that it is the changing of passwords. Being forced to change it every 30 days or every 60 days. Guys at PwC will probably have a similar thing to what we have at Kaplan, which is we get forced to change our passwords on a fairly regular basis to know that data is more secure. Okay, with those 3 sets of deficiencies, does anyone not understand the problems coming from there, or are we all good in that respect? Okay, let's have a little think about how we're going to do this in the exam then. So, it will set out in a manner suitable for inclusion in a report to management the possible consequences arising from the deficiencies identified above and any recommendations to remedy those deficiencies. Your action should clearly describe how the control procedure should operate. No covering letter is not required. Really specifically telling me in this example, I do not require a covering letter. You've got those specific instructions from the examiner. If they're telling you not to have a covering letter, then don't include one. Communicating all matters to the charge of governance, describe the attributes required for such communication to be effective. So what we're going to do is run through part A and complete as we would in the exam. Part B, we're not going to go into as much detail, but we are going to discuss a little bit. Be careful with these questions. You've got 23 marks there, times that by 1.5, give you the amount of time you should be spending on it in the exam. So let's have a think about how I'm going to do Dulux Hotels in the exam. So new page. So this is question 57. Hotels. So it wants to do it in this form suitable for publication. If I were allowed to do it as a table, I absolutely would. Tables are fantastic in audit and assurance, really, really helpful for setting out your work, making it really clear and sensible. Draw out a little table. Do it as I go along as I need to. I want a table. I'll divide it up sensibly into the 2 columns we talked about earlier, which is to have identification of the deficiencies. So what we're going is discussing the implications, the deficiencies, and the recommendations to deal with that issue. Let's think first about the first implication. So we could throw lettings for corporate customers was our first issue. So I do a little subheading. Lettings. Here I've got sort of 2 issues. I've got both the fact that they've been discounting in excess of levels and the fact that format credit limits haven't been set. So what I should be doing now and talk about discount level first. Then we'll about credit limits afterwards. So you can tell me what is a possible implication for the business of bringing discount levels well in excess of what that are already approved. Anyone got any ideas? Perspective, could that be a problem for us? Adversely affect me as a business? Yeah. So straight from the off, a possibilication is reduce profits as a result of recording less revenue than we should. A big discount on everything with a lot less revenue than I ultimately should be. Solve that problem then. What's my potential recommendation for this one? What can I do? It says here, it says they've got a policy already. So my recommendation can't be to have a policy, because I've got price levels. So what could I be doing? So already got a policy in place. What is ensure a sufficiently trained and the importance following company policy. Got to be a little bit careful sometimes with the recommendations. Recommendation can't be to have a policy if they already have one. It has to be something to do with ensuring that the policy is working correctly. What instead of, as opposed to just staff training, that I definitely want to do that. That's a good idea. But what else can I do? These authorized limits. What can I have in place? Excellent work, Edwin. So what you could have is that all discounts for authorized limits approved managers. When anybody stick any old discount in somewhere, it's got to be first. What you're going to get in the exam, you're talking about 1 mark for each well-explained indication and 1 mark for each well-explained recommendation. So be on a nice 3 marks there. There are more things I could have said about that, and that is one of the beauties in audit and assurance. Ultimately, look in the question bank answers at the back. There's more marks available actually can get as a maximum. So, for example, the planning question, there's a few questions in there where it's a 25-mark question and there's 70-odd marks available. So it's going to get every single point in the marking scheme when it comes to doing these questions. We'll have a think about all the different bits as we go down. So that's my implications and recommendations in respect of discount levels. Then I want to do the same thing, but now I'm talking to credit limits. A potential impact of regularly allowing my customers to exceed their credit limits. So what's the problem? As a business, what's my issue going to be with allowing customers to regularly exceed their credit limits? The implication is that customers regularly credit limits, we increase the chance of bad debts. There's a chance that we're going to be recording bad debts because people aren't paying us. Good reason they have a certain credit limit. Saying they can't see. Can people see each other's chats? No, because you've set it to. You've all got it to all panelists. You want it on all participants, not panelists. So all participants, like this one here. Oh dear, they don't have that option. Oh, that's not ideal. Do you all attend these? Oh, why are they taking that option off? That means oh. Okay, what we'll have to do now is anytime anyone answers a question, I'll ask the question, I'll just read it out before I answer it. That's odd, because usually there's an option to allow you to see each other's points, which is quite strange. I wonder if, let me stopping for a second. Now, right, let's get back into that then. So I realise you couldn't see each other. Share my desktop. So, back in. So now you should be able to see each other's chats, which will help when we're answering questions. So, yeah, credit limits. By allowing customers to regularly exceed client credit limits, we increase the chance of getting bad debts. What's the recommendation there? Again, bear in mind that we have the credit limits with following them. So what could be a potential recommendation? Any ideas? What could I do as a business? Work, Edward. So a fantastic review would be regular review of minutes. Of slow payers. It's sure that we're chasing up people who are paying us very slowly. People aren't kind of get a bit far by not paying us when they owe us money. The regular credit limit and chasing of slower payers. Any ideas, anyone? What else could you do? Could possibly implement charges and exceed credit limits. It's my primary points I would make. Because my here is more that I don't seem to know my customers are over their credit limit. I'm just looking for months and months. Yeah, again, before we agree, sales a good one. Like here, we had staff training. But training, you can all discounts. They're all good points. This is probably the one I would want first. All discounts tagged. Whoops. Identification. From the staff member responsible. Non-compliance. Scroll down. Monitored. So what is there is people are logging into the tills and offer discounts. When they authorize it, it puts the person's name next to it. So it says, Greg authorised this count. Simon authorised this count. If people are offering loads of discounts well above the credit limits, we can easily see that. We know who the problem members of staff are, and we saw that out earlier than we get to the level where they're not paying us. So that's that I've wanted to make in relation to the rumour things. Again, as I said, there are more points you could have made about credit limit, but necessarily need to make every single point that's in the back in order to get enough to pass. So we're currently on 6 at the minute. If we think about what the question needs in the context of the exam, my pass mark being 55%, if I've got a 23-mark question, ultimately in order to pass it, I need to get 13 marks. So we're currently on 6 at the minute. Let's have the next few points then. So looking at the question here, I can see two plant and equipment. Company policy, which was to obtain 3 quotes for capital expenditure in excess of £5,000, adhered to on 2 occasions. So here, it's non-adherence to the policy, or quoting policy, you want to call it. Financial cost to the business in that context. If I'm going to this, and for expenditure, then good. Over fixed assets, overpaying for the items of property plant equipment that I need for my business. So we get possible deal on the purchased of a pig with cash flow issues. What can I do in terms of controls then? Any others? So potential controls should I have in place to make sure that we have multiple quotes for capital expenditure in excess of £5,000? Ideas? One more thing. That expenditure, £1,000, has a quotation also equivalent signed senior staff. By senior staff to ensure compliance. So what it's saying there doesn't necessarily have to be a consultation document, whatever you want to call it. What it's saying there is that before we make any purchases, we check that something is actually done the comparison between different quotes. So maybe the process can be you get the 2 quotes, you then form saying we've got these 2 quotes, one of them is £5,600, one of them is £6,000. We've decided to go with the £5,600 one for whatever reason, blah, blah, blah. Then by someone, so there's responsibility. That if there's any problems, we can go back and say, well, why did we not ultimately get the deal on this? Can I other special controls we could have in place? The potential code we might have in place is implement a full tendering committee. Deal with purchasers. Now, that's not going to be somebody's sole job to the tendering committee. You might have the FC and the FD on there, maybe another member of the accounting staff, maybe someone from a different department as well. But have some sort of committee, some sort of organised structure so that people can have some transparency. We can see who's approving what, who's coming up with what ideas. So that's potential mark there. So at the minute, we are on currently 9 marks. So 1, 2, 3, 4, 5, 6, 7, 8, 9. We did 12 to pass the exam, so another 3 out of the next bit. I said it's not every single point, and I really want to try to aim for more than this by the time I come to the exams in June. But what we're trying to get across here is that actually there are enough points that you can pass these questions. So whilst it might at first seem a little bit daunting, you can get there. Practice. So look at the third issue then. My issue is computer systems. Servers holding business critical data and systems of non-listed in cited in secure locations. So get in there, get what they want in terms of information. This word is at the discretion of staff members, is that second issue. So, oops, sorry, it's over here. Thinking a non-secure location. Anyways, guys, what are the potential implications here? There's a fair few here. I'm probably going to go for 2 implications for this one ultimately. So potential implications to the business if data is stored at a non-secure site. So you could work, Edwin. Data theft can give you a bad reputation. Loss of customer data. Loss of client goodwill. Not very particularly happy if you lose a load of client data. Customer goodwill. Business. Another potential implication for loss of data. And this is my problem than it is necessarily the customer's problems. If I had data, what am I going to do? This will be a fraud risk, but think about it from a slightly higher level. If I lost all of my data, all my accounting records, all my information, what's that do to me as a business? So they lost the customer's data. And that's my own. The issue could be losing records and data. Main prevent us from being able to even run the business. Because turning accounting records, not necessarily saying that it's going to be a fraud, someone's going to steal the info, but if it's on the secure location, maybe someone just goes on their computer to have a quick look at something, and they download a virus or download some sort of problem on the computer, destroy the information. But I don't know anymore. I make my accounts, maybe even know who owes me any money anymore, lose my lose my debt register. It's a practical consideration that maybe actually that could just be a problem for me as a business. So there's tied to this. There's one, loss of customer data, less than ideal. The second, loss of my own data. I'm going to really struggle to run my own business if I actually access any of my information. What are some potential recommendations then? Elizabeth, that's the second bit. Password changes. That's going to be a recommendation for the second bit. What I'm thinking about now is what could I do about access to stuff that's stored in a non-secure location? What here is ensuring, whoops, red, is ensuring servers with data are held in a room with access. So not anyone can get in the room and start messing about on the computers. Passwords are good, but they're not always enough, because if someone can get the passwords for an issue. Get through a locked door is potentially more an issue to something. If you have locks with keys or some sort of PIN code on it or passcode, and prevent people getting on to the actual computers themselves before they even get to the chance of entering a password. Another way. At this point, we'd have passed the question. We had enough marks here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12. So we passed the question at this point. We'll go and finish off the last bit, though, because I want to really get a nice, comfortable pass. It's a 55%, but I'm trying to get a nice, comfortable pass. It's very difficult to get 100% in audit insurance. That's part potentially a little bit subjective, but I want to get nice over the 55, so I've got a nice, comfortable pass on me. So the next issue then, passwords. What is the potential issue for the business with password changes? If people use their passwords very regularly, what's the potential problem? So my issue is the interval between the changes the great chance words become unsecure. I don't change my password for years and years. There's just a much greater chance that someone's going to find out about it. So insecure as a result of not changing passwords very long. Oh God, sorry. Come on, give me black. So insecurities as a result of people just having the same password for ages. It's the same issue with people having the same password for everything. So if you've got the same password for your computer, you have for your online banking, you have for everything else, it's not particularly secure. So do think just about making sure. My questions then, what should I be doing? So Elizabeth, if you suggested this already, is to ensure fast enforce some sort of system for password changes. So sure, regular basis. Every 30, 60, 90 days, however long we think is reasonable. Ensure changes are system forced so that people have to change them. a best practice policy, which is you should change it every day, or you should, well, not every day, probably a bit excessive, but you should change it every month. That makes people do it, and that is probably what your computer will have. So, up there. But there's extra little bits and pieces I could put in, but that's where we're going to pretty much leave that question out, because we've got to get through the audit reporting type stuff as well. So, if I that question, do you think it'd be okay? What better practice once you've had got a few more doing those sort of things in the exam? Think of those kind of big context, the sort of audit reporting style ones. So you're quite happy then. The thing about these is ultimately just boil down to common sense, which you can learn as much as you want about audit and assurance, but sort of questions, it's just applying a bit of common sense. Sort of, yes, this is the problem, so this possibly more assurancy, these issues. But then the recommendations are just practical, sensible solutions that are specific. So I've been very specific with these. Things like ensuring that servers with secure data are held in a locked room with limited access. That's dead specific to exactly what it is that they need to know. Go around the bush and explain things sort of very slowly, or explain them in loads and loads and loads of words. Just get straight in there, explain exactly what the problem is. Cool. What we will do then is have a little think about that question. I think break a little bit earlier than usual today, and we'll take it now until 10 past. I don't want to start audit reports and have to stop halfway through. So a little break until 10 past 7, and we'll get through audit reports, thinking about specific scenarios. Termination time tonight, we're probably looking at about 8:20ish, and some costs relatively topic audit reports. One of the diagram, the other diagram. So probably finishing sort of 8:20ish, 8:30, maybe 8:30, depends on obviously how long it takes to do the question. But we'll come back and we'll start again at 10 past 7. So a cup of tea, and actually in 15 minutes. Yeah. Let's make a start again then, for this evening. So what we're going to a little bit think about now is audit reporting. So that was our reports to management. Now we have a bit more of a think about audit reports. So reports are all about what happens completion of a statutory audit. So audit reports then you can summarize a nice little diagram like this. The unmodified report here is the first sort of report we might issue. And an unmodified report is if we have no material problems at all. So either no issues or any issues that we have are immaterial both in isolation and ultimately in aggregate. Material problems and something change, but it can be changed in a number of different ways. So if there is a problem, then we have to modify that report. To start modifying the report, we've got a couple of options. We either modify the report and issue an unmodified opinion, or modify the report and issue a modified opinion with that. A report with an unmodified opinion then falls under either emphasis of matter or other matter paragraphs. Although there is something important or unusual going on, it's been properly dealt with in the financial statement. So we won't change the opinion. There's some issue within the entity. Maybe there is significant uncertainty with regard to going concern. And that's the key situations that give a modified report with an unmodified opinion. Maybe there's significant uncertainty around going concern, but it has been correctly disclosed. If it's been correctly disclosed, then we can't change the opinion. But we can it to the user's attention. And that's what the emphasis of the paragraph 4. Yes, the accounts are true and fair. They have been properly prepared. The report is consistent with the final statements. However, there are also some issues you should be aware of. For example, potential significant uncertainties with regard to going concern. Use an emphasis of matter paragraph or other matters paragraph. Other matters paragraphs are used where that issue or unusual item is related to something outside of our normal financial statements. For our financial statements, we're providing an opinion on the statement of financial position, income statement, statement of equity, the cash flow, all of the notes, and the director's report. So a problem or something unusual in, say, the chairman's report. Well, it falls under the normal remit of the audit. We do still need to read it and bear in mind when we come to our conclusion, because ultimately it is included within that annual report. So in the exam and other matters paragraph, you would use when it's something like the chairman's report that's wrong. And matter relates to the financial statements and related problems. Modified report with an unmodified opinion is where there's a problem, but it has been correctly disclosed in the financial statements. Modified report with a modified opinion, things gone wrong in the financial statements. Say they give a true and fair value. We say these accounts are true and fair because there's something wrong. Maybe they accounted for inventory at cost when it should have been at NRV, or they've lost all of the information that we needed in order to conduct the audit. It's got a potential issue with whether or not we can collect enough audit evidence. So modified report with a modified opinion is when something's genuinely gone wrong. Significant uncertainty, like it was down this side of the diagram. Significant uncertainty, like it is down this side of the diagram, it's actually genuinely gone wrong. So something's actually wrong in this financial position or the income statement or any of the notes to the accounts. Three options fall under qualified, adverse, and a disclaimer. So qualified opinion is when I've got a material but not pervasive issue. And that's a really important phrase, material but not pervasive. So maybe my inventory is slightly wrong, or my revenue is slightly wrong. Material, so it does the opinion, because I can't say the financial statements are true and fair if I know there is a material error in it. However, it's pervasive. So it's not fundamentally affecting the financial statements or what's happening within them, but it's one that I need to highlight. Qualified opinion, when I've got a material but not pervasive issue. Qualified opinion is adverse then, occurs when I have a material and pervasive disagreement. To the director's to the financial statements, you need to include inventory at NRV because it is lower than cost. And they say, no, we're here at cost. I can't knowingly sign an incorrect audit report to say something fair when I know it isn't. So an adverse opinion. Where it is material and evasive, fundamentally affects the accounts in some fashion. That will come up, and the most common case in the exam is incorrect basis of preparation. The financial statements are being prepared on the going concern basis, but the entity in consideration is not actually a going concern. So they prepared under the breakup basis, they're actually preparing under the going concern basis, and we completely disagree with that. That would carry them pervasive disagreement. You need a disclaimer of opinion when you have a material and pervasive limitation of scope. So I briefly mentioned that one of these we might encounter is inability to collect sufficient evidence. So essentially, I am trying to collect all the evidence to ensure that my statement of financial position and my income statement have been reasonably completed, and I just can't. So maybe a virus wiped out all of the computer records, and there's agree any of the accounts too. That's within pervasive limitation of scope, because I can't collect any audit evidence, any in existence. Brief summary, what we're going to do is we're going to go through each of the issues individually and discuss what's going to happen. Certified reports with an unmodified opinion. So we include an extra paragraph within my audit report. Just, whoops, I can still, sorry, can't quite see. There it is. I'm including an extra paragraph, which is, as I said, to highlight something important, potentially a significant with regards to going concern or something of that ilk. It is something important in the financial statements, in the director's report, or in the income statement. Then it's a matter paragraph. So I include that extra enters a matter paragraph to say, look, the account is unfair, but we draw your attention to this potential issue. So for example, that would be material uncertainty about going concern that has been adequately disclosed in the financial statements. Note that it is an uncertainty. It's definitely not a going concern. We're just saying our audit evidence suggests that there is some uncertainty with regards to whether the entity is going to continue as a going concern. It's something important outside the financial statements. So the example that I gave was the chairman's report. With other matters paragraph. Consistency between other information in the annual report and the financial statements. Here the financial statements show profit having increased by 10%. Chairman's report, they're saying profit's gone up by 25%. So that's an inconsistency. We can't allow that to be in there without mentioning it somehow. It's a remit of the financial statement audit because it's not in the director's report. Also part of the annual statement. So I went through an other matters paragraph rather than through an emphasis of matter. If I do that, does everyone understand the difference between the two? Okay, excellent. So certified audit reports with an unmodified opinion. Or your open book references. So ISA 706, paragraph 5A, 6, 7, A1 and A2, they go in an emphasis of matter paragraph and sections in which you may use one. So your audit and assurance open is your international auditing standards. So these are useful places to highlight. 5A, 6, 7, A1 and A2. Paragraphs are covered in ISA 706, 5B and 8. There again, they're useful paragraphs if other matters come up. Other matters is more niche. It doesn't come up in the exam as often as emphasis of matter. Emphasis of matter in itself doesn't come up massively often. It's only less frequently examined than, for example, qualified audit opinions. Those pages are very useful if you would need to go through them. So definitely highlight those in your book, just in case you needed them in exam and they did come up. But as I said, other matters paragraphs aren't quite as examinable as emphasis of matter paragraphs, but if they that's in the book. So let's have a little think about the next situation. So the next situation is a modified audit report with a modified opinion. This comes up the most frequently. There are two options. The nature of the matter giving rise to the modification could be that the financials are materially misstated. Of a disagreement. So this hot bit here is having a disagreement with the directors. So we're saying to them, look, you change inventory, you need to change revenue, or you need to change whatever it is. And then no. Material but not pervasive. So for example, inventory example I discussed earlier, they want to hold it at cost. We're saying it should be NRV. It would be likely material, but it's not pervasive because it's isolated specifically to inventory. So that qualified opinion, we can also refer to as an except for opinion. If it's a disagreement, but it's material and pervasive, then it's adverse opinion. An option then, inability to obtain sufficient appropriate audit evidence is referred to as a limitation of scope. That's why I can't collect the evidence I should reasonably be able to collect. Can't collect it, make an opinion. If it's real but not pervasive, you would issue a qualified except for opinion. Those except for opinions would literally say the financial statements are true and fair, except for inventory, where we believe it should be held at an NRV. Directors are holding it at cost. The difference would be this much. The financials are true and fair, except for revenue, where we're unable to obtain sufficient appropriate audit evidence due to loss of records. So these two options here, qualified opinions or except for opinions, are saying that except for some individual line or part in the financial statements. Because it's not a basic issue. The fundamental statements aren't fundamentally completely wrong, then fine. It's just a little bit wrong with them. That's make that qualified except for opinion. Material and pervasive, though, that's where I've got a fundamental issue in the financial statement. So either a material and pervasive disagreement, that's strictly adverse opinion. And that is most likely to come up where they have put on an incorrect basis. So they should be preparing on the breakup basis, they're actually preparing on the going concern basis. So potentially then with something being material and pervasive is if I've got a material and pervasive limitation of scope. So that ability to obtain sufficient appropriate evidence, material and pervasive issue. So that would be something extreme, like complete destruction of accounting records. But it's not accounting records because my computers have been destroyed, a virus has destroyed all the data on them. That is a disclaimer of opinion. Got to the scope, and it is pervasive, so that is a disclaimer of opinion. Make sure that you realize that immaterial problems do not give rise to modifications, unless there's a lot of immaterial problems which are material in aggregate, i.e. when you add them all together. If it's material, then it is a clean, unmodified audit report with an unmodified opinion. It will come up in the exam. And we'll be writing no modifications to the audit opinion, no modifications to the audit report. Don't panic, because some literally do not have modifications to them. Because that's a situation you're going to encounter in real life, so it is one that you'll come across in the exam as well, potentially. With modified audit reports and modified opinions. So think about the open book tech references then. So where can I reference in my open book? Where can I go to get help in that open book if I'm a little bit lost in the exam? Modified reports then with modified opinions. Act 705. Paragraph 5 includes the definition of pervasive. So if you're a little bit unsure about whether something's pervasive, look at paragraph 5. I'll give you a top tip though. Pretty much most things are not pervasive. issue is something that's fundamentally wrong with the financial statements. So something like basis of accounts, construction of accounting records. People have a tendency to want to try to make things pervasive more often than they really are. So if you're making something pervasive in the exam, make sure you're certain. At the time, it's not going to be. 7 to 10 discuss the types of modified opinion, certified except for opinions, adverse opinions, and disclaimers of opinions. Explain the impact on the audit report. Sort of extra paragraphs I need to include. A1 includes a summary table. That's a very good table. So that is a fantastic one to highlight. It's going to be very, very, very useful going forward. It gives you a nice little summary of all of the effects. So you don't want to troll through the standard itself trying to find all the problems and the effects. You can just nip into that summary table and it'll tell you some helpful little bits and pieces. Finally, the appendix also contains illustrative audit reports, which show you what what an audit report would look like if you were to include these modifications. In the exam, most of them they ask you to describe the giving and whether or not it's a modified report, whether or not it's a modified opinion. They don't actually want you to write out the audit report. They want you to say, this would give rise to a modified report with a modified except for opinion. You need to actually start writing out an audit report. So in terms of usefulness, they are good to give you an understanding of what goes in where, but there's no need for you to be able to actually write out a full audit report. Okay, so having a look at to get an idea of what audit report looks like, but you actually write that out in the exam itself. What we do is instead of looking now at one exam question, what we've taken various topics and scenarios from different exam questions. So we can have a look at each individual item. So we've picked out some of the more complex problems to run through. So you're effectively in a position to deal with any complications as a result of this. So, as I said, the following scenarios are taken from past exam questions that were actually in real exams. For all of them, what we're going to use is the typical requirement of whether you would modify the audit report, reasons for your conclusions, and outline the modifications, if any, to each audit report. That is a classic audit reporting style question. Here's a problem. What's the report? What's it on the opinion? Modified? Is it not modified? That's what it boils down to. Find the audit report, and I'm on the audit opinion. So let's go through each one at a time, explaining what we would put in. So number one, it works has identified that there was no system of control over cash sales that could be relied on for the purpose of the audit. There was no satisfactory audit procedures that could be adopted to confirm that such sales were properly recorded. Sales comprise 15% of recorded revenue. So, the two situations. There is either a disagreement where we're saying one thing and the directors are saying the other, or there's a limitation of scope whereby we can't collect the evidence that we need. So due to scenario one, a limitation of scope or a disagreement. And yes, always the first step in an audit reporting question, decide whether it is a limitation of scope or whether it is a disagreement. I think it is then a disagreement or a limitation of scope. It's a limitation of scope because I can't collect sufficient audit evidence. And that's what is it really. No satisfactory audit procedures could be adopted to confirm that sales were properly recorded. So one is it a disagreement? Is it a limitation of scope? So is it material? Well, it comprise 15% of recorded revenue. So do we have that's likely to be material? 50% of revenue. Is that material? So it's material. Our basis is for revenue. What's the thresholds that we have for revenue materiality? So what is the kind of range of things that I would consider material when thinking about revenue? we've got a range for profit before tax, a range for revenue, a range for assets. 5% is a low range. What's the top one? For 5% and what? Yeah, 10. Good. So between 5% and 10%, if in excess of 10%, then it's going to be material. In exam, you always take the lower threshold as the trigger. So if it's in excess of the lower threshold, then it is material in this exam. 5% is well above 10%, so it's material. Edwin, you said it's pervasive. Why? Sorry, Edwin, you said it's not pervasive. So why is this issue not pervasive? Or in what's the pervasive issue? Yeah, it only ultimately affect. I wondered what that said then. So FSLI was some acronym I didn't know. It affects one line, so it's isolated to revenue. So whilst it is a large issue, it is isolated to revenue. Material, but not pervasive. One, what kind of problem is it? Disagreement or limitation of scope. Step 2, is it material? Step 3, is it pervasive? Step 4, what is the effect on the audit report? In the exam, you have to describe what the effect is. What is the effect on the audit report in this situation? Can anyone think? Which means you qualified report with a model opinion, and that opinion is a qualified or except for report. The financial statements are true and fair, except for sales, which comprise 15% of total revenue. That's actually right in my audit report. This for that modification is above the opinion paragraph. So I explain the basis and why it is that I'm changing it before I then actually explain the change itself. So that's included above the opinion paragraph. Okay, with that, we're gonna talk about exam technique afterwards and how I'm actually going to set this out. But if you think about following this step procedure, 1, is it a disagreement? Is it limitation of scope? Number 2, is it material? Number 3, is it pervasive? Number 4, what is the effect on the audit report if there is one? So those 4 steps will help you answer the question. And think about how to set it out in a little bit. Scenario 1. So do you have any questions on that? Okay, awesome. Let's have a think then about scenario 2. So, scenario 2. You're using Book Limited for the year end of the 31st of March 2013. On the 20th of April 2013, Books customer Page Limited entered liquidation owing £241,000 to Book Limited. Books with progress included £520,000, which is the cost of customised work relating to Page. The book do not believe that the debt should be provided for. The liquidation started after year end, and they're planning to convert the WIP at a cost of £300,000, which will then allow us to sell it for $700,000. It has total assets of $17.9 million and EBT of $5.2 million. So first, is this a disagreement or is it a limitation of scope? Is it with me being unable to collect evidence? No. So it's a disagreement. And this arises because of this. The doctors of the book do not believe the debt should be provided for as liquidation started after their year end. However, liquidation started 20 days after the year end. Suggests to me is that liquidation was going to happen at the 31st of March. You don't go bankrupt in 20 days. into liquidation on the 20th of April, you would go into liquidation on the 31st of March. Going into liquidation on the 20th of April is indicative of the fact that there was a problem at the 31st of March. What kind of event this is then? Some event. Good. Post balance sheet adjusting event, which means I have just the balance sheet at the year end, even though the situation occurred after the year end. There's a disagreement because the directors are saying they don't have to do it. We are saying, yes, you do, because it is a post balance sheet adjusting event. Receivables and the work in progress are separate issues. The balance is 241,000. If 241,000 as a percentage of 5.2 million, you get 4.6% of profit before tax. So 241,000, 6% of profit before tax. If an asset book limit has total assets of 7.9 million, then it's 1.3% of total assets. Would be material. Good. In fact, be material. So it's a material problem. So we've done step one. It's a disagreement as a relation to disagreement over whether something is a balancing post-balance sheet adjusting event, which it is, even though they're saying it's not. Material, because it's 1.2% of total assets. It's not pervasive because it's related effectively to receivables, and there's a little bit of a problem with WIP. It's all assets. So overall, my assets are materially misstated. It's not pervasive because it's all asset related. Let's think about this WIP amount then. If I think about my international reporting standards with regards to inventory, what do I have to hold inventory at the lower of? Think about accounting year assessment. Lower of what? Remember? Good. Cost or NRV. So as answer there, I'm going to be including it at 520,000, which is the cost. However, and £300,000 to convert it, to be able to sell it for 400,000. NRV of this inventory, the cost of 20k, net realizable value for the inventory. Good. 400,000. I think you're more fair. I assume you meant 400,000 rather than 40. Good. Because my to convert is 100,000. Sell it for 400. So sell less 300, give me 400,000 at net recoverable amount. So then at 520, we think you should at 400. So they've overstated their inventory by 120k. Is 0.7% of total assets. It wouldn't be material on its own. However, because also is affecting receivables, we would put them both together and say overall the misstatement is 361. The 241 plus the 120 means overall my assets are missed by 361,000. 0.9% of PBT and of assets, which is material. So overall, I would do my opinion based on both added together. would it be? Any answers? Good. Items are true and fair except for receivables which are overstated by 241, inventory which is overstated by 120k. Okay, with scenario 2. Three, something a little bit different. Your client, Card Limited, has refused to provide written representation that it fulfills responsibility for the preparation of the financial statements. It's at the auditor with all relevant information, and it's refusing to acknowledge all transactions as being recorded. Saying is management is refusing to provide representations that it's fulfills responsibilities, that it provides you with all the relevant information, that all transactions are being recorded. Is a disagreement or a limitation of scope? Good. It's a limitation of scope. First, I feel a little bit like a disagreement because it's management refusing to do something. That's highly overridden by the fact that actually it's all about sufficient audit evidence, which I can't get in this case. What do you? Good. By an ISA. Do you know which one it is, Edward? Well, you know it's required by one. It's 580. It requires them to provide written representations on a number of different things. What do you think? In fact, pervasive. SA 580 actually specifically says the auditor must disclaim their opinion when management refused to provide written representations on their responsibilities to prepare financial statements. So they refuse to provide this first written representation. It automatically triggers a disclaimer of opinion. What's happening is management are going, well, responsibility for this, because we certainly aren't going to take responsibility for it. With them, we're auditing them. That's our job. So this will automatically trigger a disclaimer of opinion, a material and pervasive limiting of scope. So number one, is it agreement or a limitation of scope? In this case, it's a limitation of scope. Number two, is it material? Yes. Number three, pervasive? Yes. ISA 580 specifically includes this as a pervasive issue. So now my solution is to issue a disclaimer of opinion. So I cannot provide an opinion on financial statements as the directors have refused to provide written representations, so we disclaim our opinion. When actually set as a question, most people got that wrong because most people didn't actually realise that it is prohibited from a standards point to do anything other than the disclaimer of opinion. So just be a little bit careful if something like that comes up. Everyone that? Good. That kind of specific scenario, you should hopefully be able to smash it. Now, to be fair, with audit reporting questions, because there are such set answers, some parts of insurance are a little bit more subjective. You could argue one way or another. With audit reports, it is pretty much set in stone. If this is a situation, this happens. People quite often actually end up getting full marks in audit and assurance reporting questions. To get a lot of practice and engage to doing them, because it's probably the best opportunity to absolutely kill it on a question. Loads of people from the groups a couple of sittings ago got me out of 20 when this was a question. All people you suspect got 4 marks on this, so definitely be happy with this sort of stuff. Quick talk about exam technique. You have to cover the following points. What's the nature of the problem? Is agreement or is the limitation of scope? You've always make some comment. Use those words. Say, this is a disagreement as a result of management refusing to write inventory down to the NRV. This is a limitation of scope as a result of management refusing to provide written representations, acknowledging their responsibility to prepare the financial statement. The problem. In the seriousness of the problem, make some comment on whether something is real or pervasive. What is the effect on the opinion? A qualified opinion. Is it a first opinion? Is it a disclaimer of opinion? Is it an emphasis of matter paragraph? Another matter paragraph? Or is it simply no effect on the audit opinion and is in fact unmodified? What effect on the audit report? Do I need that a paragraph above the opinion explaining it? Or not like that? See, that's how I want to set things out. I would not use a table for these actually. Tables don't lend themselves particularly to audit reporting questions. More sensible is to lay it out a bit like this. A more sensible way of laying out an audit reporting question. Appears like this. Subtitle for nature of issue. And this agreement as a result of this. Have a on materiality and purpose. This is 2.5% of assets, which is material, is not pervasive. Conclusion. Rise to qualified opinion. Paragraph above the opinion explaining the basis for that qualification. This is more sensible than a table for audit reporting questions. So be linked really clearly, but it's more sensible to lay it out like that. And for issue, you should have a separate page for the issue. Do issue 1 on one page, turn over, do issue 2. Do issue 3 on the next page, etc., etc. Some questions on the exam technique side of things for those audit reporting styles. Nope. Lovely. What a quick do then is talk specifically about reporting with regards to going concern issues. Because some specific issues to think about when we're doing going concern. So we'll chat about those. Let's have a think about reporting going concern problems then. A going concern is it's expected to continue in business for the foreseeable future. Now remember what the foreseeable future is considered to be in accounting and audit and assurance. Considered to be the foreseeable future. 12 months, 1 year. 9.9% of the time in real life, it is 12 months in 22. You can argue that if you're a business that has a particularly long operating cycle, you do, I don't know, extremely long-term contracting. Non-current and current is probably actually more like the split between 2 years and then afterwards. You could potentially argue the foreseeable future is a different number to 12 months. Some it never is, and in reality it extremely rarely is. But do just be aware that when you're in your work environment, you may occasionally come across situations where the foreseeable future is different and actually acceptable as justify. It's not a going concern. We just use the breakup basis of accounts. So it's between breakup basis and concern basis. There are two fundamental big differences between preparing your accounts on the breakup basis, preparing your accounts on the going concern basis. You know what they are? Preparing on a going concern basis, on current assets and current liabilities, non-current assets and non-current liabilities. I'm doing it on a breakup basis, i.e., when I don't think I'll be a going concern, have long-term assets or liabilities. They're all short-term. Classified as current. What I have to do, I value my items at the recoverable amount, i.e., what I can actually sell them for. So them at carrying amount or revalued amount or something like that. I mean the recoverable amount. So major differences. Essential is there are new liabilities that I had in place before, such as provisions for redundancy costs or something of that ilk. So I'm using the breakup basis of accounts. So if you don't think I'm a going concern, I shouldn't be preparing my accounts on the going concern basis. I'm preparing them on breakup basis. Oops, sorry, it's come backwards for some reason. So let's now have a look at some specific going concern issues and how they affect the audit report. So exams, they've been tested in a number of ways. First is the company is not a going concern, and the breakup basis has been used to prepare the financial statements. The audit report is in fact an unmodified opinion, an emphasis of matter paragraph. It's not modified because it should be prepared on the breakup basis, and I prepared it on the breakup basis. So they're true and fair. Going concern, but it's all still true and fair. So the modified opinion with an end matter paragraph. It is not a going concern, and the going concern basis has been used to prepare the accounts. And that is the fundamental issue an adverse opinion is triggered. So this is pretty much the only situation in the exam that triggers an adverse opinion. So they're not a going concern, but they have prepared their accounts as they are. So that becomes an adverse opinion, i.e., the financial statements are not true and fair. They don't show a true and fair value of the entity at the reporting date. So situations, and it's important to stress, situation 1, the company is not a going concern. They have done the right thing about it. So we provide the opinion. We do want to draw it to the shareholders. We can't the opinion because there isn't a misstatement. There could be breakup basis, and they are. But we do use the paragraph to draw attention to the users of financial statements. Section, there is a huge material misstatement that is also pervasive. Because you think about the difference between the two, reclassifying everything as current and including things at recoverable amount, it's really different to how you would prepare a going concern basis. So fundamental differences. As a result, you would consider that issue pervasive. With that, has anyone got any questions on company not a going concern? This is a situation when the company is not a going concern. No? There's uncertainty around going concern. So they're not sure if they're a going concern or not. Version, going concern status has been uncertain, been adequately disclosed. Uncertainty regarding going concern. Maybe something happened right at the end of the year, and it's not clear how that's going to affect us yet. So there's uncertainty. If disclosed, that is what they would have done. Again, it's an unmodified opinion with an of matter paragraph to draw shareholders' attention to the uncertainty. Just look, the accounts are true and fair, the profit is prepared, director's report is consistent. However, there is potentially a significant issue. Next, going concern status is uncertain, but it's been inadequately you opinion due to a misstatement. Disclosure is a statement in and of itself. So numbers trigger misstatements, like disclosure can. Disclosure isolated to the notes, so likely to be material than pervasive. Or technically, you could consider the lack of disclosure material and pervasive. That would be your professional judgment. And things about audit and assurance in real life is different from audit and assurance in the exam. That we draw more of a line between black and white in the audit and exam, where in the grey areas exist a lot more in audit and assurance than suggested in this. Argue it is material and pervasive. Exam, it is good material, but not pervasive. And your choice on which that is in real life, as I said, it depends on professional judgment, but it could go either way. Read the question properly, though, because some questions tell you if there's been adequate disclosure, so it's option 1. Some tell you when there hasn't been, it's option 2. So some questions are very specific about whether something has been adequately disclosed or not. Some do not tell you whether or not it's been adequately disclosed. What do you think you do if it doesn't tell you whether it's been disclosed or not? What should be in the exam? What you should do is discuss both. So it doesn't tell you which one's happened. Discuss both options. So say, has it been as if it was adequately disclosed, or modified opinion with emphasis of matter. If it isn't, modified opinion due to the misstatement, material but unlikely to be pervasive. So if it doesn't tell you whether or not it's been disclosed adequately, explain both sides of it. Mark's going for explain both options. A couple of specific scenarios then. So, questions. 4 scenarios are taken from past exam questions. For all, we're going to use the typical requirement of whether you would modify the audit report, give reasons for your conclusions, and outline the modifications, if any. So, approach to that taken earlier for general reporting problems, thinking specifically about issues pertaining to going concern. Scenario 1. Writing customer correspondence during the audit of MM Limited for the year ended the 30th of September. A letter from Rossiter, whose largest customer. The letter informed MM that following a strategic review of its supply base, Rossiter was not going to renew its contract with MM when the current contract expires. Sale of Rossiter represents 60% of MM's revenue. Is a significant uncertainty, or do you think it's straight up not a going concern? I think. And see, straight up not a going concern. Yeah, in fact, it is an uncertainty. They lost 60%, which is huge. So what's happened? They could potentially get some other customers back. They may make up for it with other contracts. See about the going concern status due to loss of a major customer. Good certainty path. So what should the directors do about this uncertainty? What should they do? Yeah, so disclose it. Do, and it has adequately disclosed, review it, and we say, yep, adequately disclosed, absolutely great. On my opinion, with an emphasis of matter paragraph. Adequately disclosed, we would consider it material but not pervasive, and note that it is judgmental in reality. You would consider it pervasive. They usually give you the option to get up for discussing that. So it's unlikely to be considered pervasive, and you go down the option of material but not pervasive. But they often give a mark for a really quick comment at the end saying, note that this is potentially judgmental and could be considered pervasive. So get in remark discussing whether it is potentially an issue. Okay with that. So that makes sense to people. So number 2. Auditing Mirkwood Limited for the year ended the 30th of November. The directors have based their assessment of the appropriateness of the going concern presumption forecast for the 6 months ended the 31st of May 2013. So they provided us with information about their going concern and based it on 6 months worth of forecast. What are you supposed to base it on, do you think? So management done on 6 months. How many months should they have considered it on? In fact, 12. Can only cover 6 months. We're likely to be able to obtain sufficient appropriate audit evidence just from a 6-month assessment. So what is this then? Is it or a limitation of scope? Good. Limitation of scope, because I'm going to be able to collect sufficient audit evidence to determine whether or not they are going to be an assessment in 12 months. This opinion is necessary. It's again judgmental. You cover it off by either saying that it is material with a qualified opinion, and saying you could, on a mental basis, determine it to be qualified, determine it to be pervasive. So you could go down again either options because there's a bit of a grey area and is a tad judgmental. Consider it material but not pervasive, qualified opinion, or you could consider it material and pervasive, of opinion, can't provide an opinion of financial statements. However, a second modification that you could make, because you can have multiple modifications. So let's say we decided it was material but not pervasive. Issue a qualified opinion, so true and fair, except for to obtain sufficient audit evidence with regard to going concern. The second is that management are required to disclose the fact their going concern review covered a period of less than 1 year. So, as well as doing it and being able to get sufficient audit evidence, they've actually got to disclose it that used 6 months. If they don't, and fail to result will result in us issuing another qualified opinion. You can have multiple modifications. There are 2 except 4 opinions in a audit report. And that failure to disclose, they have been basing their forecast on 6 months rather than 12. So failure to disclose is also an issue of this question. That would be what you would refer to as a bit of a prize winner point. Not many people in the exam knew that they had to disclose the difference between 12 months and 6 months. And if they don't, it is in fact a modified opinion again. So you have 2 X4 paragraphs in this exam. Everyone okay with that? Okay, what we're going to do now is we finished a bit. We need the end. We finished a little bit earlier than we thought. Actually, I've got a couple of questions I want you to do as well, and then get back to me on the message boards, etc. If you've got any questions. Has anyone got any questions to ask at all about audit reports before I run through the summary of what we've talked about today? Any questions at all? So Fatima, how much are we expected to write? It isn't that much. If you want to do the questions that I'm going to set you, I'm going to set you a couple of questions to do as well. You see that actually it's very short. So for example, you don't drew out that here. Just to do what I actually do is this: the nature of issue. this extent. This is a disagreement related to injury should be held RV, but the damages are lost. Intro a bit, not a great deal at all. Materiality we could say 1.2%. You did to get that. So error over, let's say I'm using PBT, of before tax, which we considered due related to entry, so not pervasive. Final conclusion, the rise modern report opinion. You would be qualified for an additional paragraph above the opinion I think you are expected to write about that amount. Fatima, not a huge amount. I'm really succinct and just saying error material, it's not pervasive. This affects the audit report, verify the opinion, include a paragraph explaining the basis for the opinion. Most audit reporting questions will have 3 issues, and you'll want to do this for each of the 3 issues. Explain whether it's material and pervasive, what you conclude for issue 1, then go on to issue 2, what's the nature of the issue, materiality, conclusion, issue 3, nature of issue, materiality, conclusion, obviously. A lot more an exam technique for these when you come to revision as well. So you get plenty of chance to practice this, how to get it when you're doing revision. Anybody else got any other questions at all? A bit of a summary then. Reporting is going to come up in the audit and assurance exam in one form or another, so you need to be happy with it. The management questions are to stress the cost of the business. Recommendation specific. Reports, remember what we've just talked about. Explain the problem, explain the substance of it, and materiality and pervasiveness. Explain the effect on the opinion, discuss impact on the audit report. Additional questions for you to have a go at. Some back questions you should definitely have a go at to help develop your skills before you're in for SGS and Revision Week. Reports to management, have a go at question 68, Tickle Loop and Tinker. And reporting, have a go at question 67, Cableco, Third, and Medlar. Question 68 has a mix of reports to management, audit reports, and assurance reports. This is a good report, it's got all sorts of different bits and pieces mixed in. So that is a really good one to have a go at. So question 68, lots mixed together. Question 67 is a very traditional audit reporting question in the way it's been asked for many, many years. That's pretty much the end of where we need to be tonight. Liz was saying, do you have a list of questions that we should not attempt because they will be covered in revision? When you come to get to the end of your ML stuff, we'll pop up online on the Kaplan community a list of the questions we're going to do for both FAR and audit and assurance. Tell you what we're going to do in revision, we should not do beforehand.